Hello everyone. Hello Sam, uh, AK Rameshi, how are you? Hi Matt. Okay, let me see what we got. Oh, looks like some new names I'm seeing. Hey Aditya, AK, welcome Brian, Gurin, Jafar, Juan, Matt, Rameshi, Ravi. Yeah, some familiar names as well. Sam, Satish, Shri, my friend, Stuart, Zeta. How are you guys doing? Morning,
Good morning,
Aditya.
Vivek.
Morning, Vivek.
Morning.
Good morning, Vivek. Ravi, how are you doing?
Hey, Ravi, good to see you. Good.
Yes,
And I have a good
that's
news
great.
for
That's great.
Ravi. I have a good news for you. You probably would.
Yes, please.
You probably guessed already, right?
I think Lam Research, right?
You're right. Yes.
That's great. Thank you.
Yeah,
Thank
I
you,
was
though.
feeling a little bad because we didn't cover for last few weeks. And I think it's maybe I because we already had talked about TUI and doing deep dive maybe once a month is okay, two becomes too much. So today I will talk about Lam Research. Hey, good morning, Brian. Morning, Stuart. Okay, yeah, a lot of stuff to cover in today's meeting. Of course, we are in earnings season now, so we're gonna go through a couple of earnings, the big ones, which one is very sentimental reasons, because being followed, and that stock runs lot more on narrative and the sentiments than the numbers, and no prizes for guessing because we all know it's Tesla. And then other one which I'll cover earnings is Alphabet or Google. And then, of course, we're going to do a deep dive into Lam Research. That's a stock that Ravi had requested a few weeks ago, just that we have had so much to cover every week. I could not, get to Lam Research. So that's, the new stuff for this week. And as always, we'll start with an overview of macro stuff, what I'm watching in the market. We'll look at what's happening on the crypto side as well, cover both the TradFi and the crypto markets from an investor perspective. And yeah, I guess that's overall agenda for today. And hopefully, let's try to finish these. Someone can keep me honest, maybe ring a bell once it's noon time, because last 30 minutes I also want to give time to you guys to get into the breakout rooms and have some open discussions, right? There are a few things that I don't do, or it's always good to have free form discussion with other investors. So we should, I think, the presentation maybe we should do only for 2 hours, and then I'll leave the remaining 30 minutes for us to get together and talk about whatever topic that you want to talk, right? Open house kind of stuff. Sounds good. Hopefully, if you are done before that, even better. All right. Anything else you guys have in your mind before we get started? All good. How are you feeling about the markets? Come on. Don't be shy. Ramesh just says it's a all-time high. Yeah, it's a slow grind up, all-time high every day, across Nasdaq as well as S&P 500. I think maybe Dow also hit all-time high. Not sure where we are with on the Dow side. Let me just check. But Brian says a little cautious. Yeah. And we look into, some of those indicator, not indicator, but some numbers from the market. It may not harm you to be a little cautious at this point of a time. All right. I do see some new names, like I mentioned earlier. Probably will have time for maybe 2 or 3 introductions. Anyone wants to introduce themselves? Those who are joining here for the first time. All right. Jay, I don't know how to say your name, so
That's
you can
fine.
go
Hi.
ahead, please.
Hi. My name's John. I'm a new investor. I just got into the stock market about 3 months ago, 4 months ago, when that tariffs crash came. I got ready for it and decided to make some money. So I've had about a 30% um, gain, and I'm trying to learn as fast as I can. So I'm trying to focus more on options right now, just the basics. And I'm here just to see if I hear anything interesting, and maybe I can add something positive to the group. I'm not sure because I'm kind of new, but that's it.
Cool. Welcome.
Thank you.
Uh, Great. So if you have a questions around options, feel free to ask. Generally, I don't get into the details of options unless there are questions. Um, but if you want me to talk about particular strategy, etc., do let me know. I can cover that maybe in the next session, or if there's just a question. There are many folks in this group who are very experienced uh, option traders, right? And they do all type of strategies, right from zero DTE to back ratio spreads and all that stuff. Mostly, I guess we are option sellers. I am mostly option sellers, right? 99% of my trades will be selling the options. So that's what I focus on. I know few of them also of the similar opinion. But yeah, if you have any questions, shoot us. I don't think today, at least I have anything lined up to discuss around option strategy. The last one which I did was 2 or 3 weeks ago, where we looked at box spread option strategy and how you can use it to borrow from your brokerage firm at less than 5%. You don't have to pay margin for 11, 12%. So that was the last one to cover. But if you are new to options, which I think you just said, I do have a recording of some of the options bootcamp that I did last year. Um, yeah, you can watch that. A Johnson says, have you ever addressed ULTY or MSTY? Sorry if I missed that session. So I think uh, let me just remind. MSTY, is that the leveraged one or is that an income generating fund? I get confused between. I think MSTY is the yield max stuff. Yeah, so I had covered, I think there was one session where I talked about generally around these income generating ETFs that I've been seeing in the markets over the last 2 years, because ever since the Fed had increased the interest rates, you can get much better premium on the call side. So then I saw a lot of slew of these income generating ETFs coming to the market. MSTY is one of them. There are similar for this for Coinbase and Robinhood and whatnot. So I have covered it in one of our previous sessions in terms of how these are structured and what you should be aware of if you want to play in these things. Focus on total return and also be aware of the tax consequences, because the income is not a regular dividend income, so it will be considered as your unqualified dividend income. So I have covered it in one of our previous sessions. I don't, at top of mind, I don't recall which session was it, but I can let you know next week. Or if you can go and look on the website where the recording of all the sessions, you'll probably find it. So my discussion was on a generic yield max ETFs, right? And most of them operate on the same principle. having underlying and basically sell at the money or close to at the money calls to generate income and return that as a capital return to the shareholders. Okay, anything else before we get into today's session? So I took a note on maybe next week, or if you can ping me on Meetup, Johnson, I can provide you the link for the recording of that session where I cover this yield match stuff. Good option for IRA, perhaps. You'll have to figure out whether you're interested in your total returns or you're interested in just the income, right? So that's more important. So if you look at, let me just bring up MSTY, right? Now MSTY is year to date. Hopefully you guys can see my screen. Just want to make sure that.
Yes, we can.
All right, cool. So if you look at MSTY, it's year to date, it's down 23%. Right. Now the underlying MSTR is up 35%. Right. So now you have to figure out, including the income that you received from MSTY, and then but you lost on the capital appreciation side. In fact, you have a capital loss out here. Does it overall total return, which is income plus your capital appreciation, what is better to hold? And then also figure out add the tax consequences. And then you have to determine which is providing you overall total return. But if you have a need for a consistent income because gotta pay my rent, I don't have any other income coming in, capital appreciation is fine, but I can't take my portfolio statement to grocery store and buy groceries. In that case, maybe, MSTY might work out for you, but don't get sucked into these, the claims from these issuers saying you gotta have a 70% dividend yield, 100% yield. You got to understand how these yields are generated and what are you paying, what are you missing out in that yield. There is no free lunch in this capital market. So if something seems to be too good, you need to figure out, okay, what's the catch here? In the catch in this case is, these, you probably might have been better by just holding that underlying, if that meets your requirements. Right? And I think Coiny is another one. There are a bunch that I covered, right? And yeah, so that's the case. Maybe let's go further and look at 3-year one day. Oh, this wasn't even there for 3 years. Hold on. When was this introduced? Okay, so it looks like this was introduced only in 2024. So I don't even have the data for, so yeah. Or is this old? Something on the think or swim? I thought maybe, isn't MSTY has been around for some more time? Let's go to Google Finance and check it. MSTY but here. No, I think that's fine. It's been around only since 2024. And I'll compare with MSTR. Right. Okay, not much. Even just looking for 1 year, you see the difference. So that's a decision you need to make. We can look at some others similar to YieldMax has got tons of these. I think there's Coiny, CONY, which is basically generating income on Coinbase. And let's compare with Coinbase Global.
Vivek?
Yeah.
We're just seeing the Chrome page. Are you sharing something different? Or are you planning to do something
I
different?
am sharing my browser.
Yeah, browser.
Yeah, are you seeing that YieldMax coin option income strategy? The
No.
chart, Google
It just
Finance.
shows pump.fun price.
Hold on. Take it. All right. So I was sharing the wrong screen. Thank you. This is what happens when you have multiple screens. I should have specifically asked, what are you seeing on my shared screen? Okay, now you're seeing this, right? Coin. So this is your comparison between Coney, which is your income generating fund, and holding the Coinbase, which is yellow. Let's go back to what I was showing you earlier, which was MSTY, and compare it with MSTR. I'm not saying one is good or bad, but just you need to understand what your requirement is. Not everything is, 70% yield may not be 70% when you consider the total returns. Let me see some questions.
Hey, Vic, can you hear me?
Yeah.
Okay. No, I've been trading Max and a bunch of other ones. Here's the most important thing is the entry has to be when the price of the stock has to be very low. If not, you will lose money. I even put almost 100 grand and tested a bunch of them. Okay, so I know all those inside out. There's a bunch of new ones that just came out the last 2 to 3 months, which are even weekly. I trade some of these, and you can get burned big time.
Yeah.
So the most important thing is the entry. If you got in April 7th, 10th, 15th, or April by May, you're doing good. If you enter now, you get into a very dangerous territory, and you have to manage it. You have to do a bunch of stuff. So if you guys got any questions on any of those ETFs, there's a bunch of them that just got released the last 2 3 months. I could probably list you over 200 or 300 of these ETFs now on the market. Just for based on MSTR, there's probably about maybe 15 to 20 of them, and almost a lot of them also have the reverse of them. So you can buy the reverse of them, so you can hedge buying both sides. Like I think fiat is the other one for coin. I think it's fiat. Is it fiat? I think it's fiat.
Mm.
It's the opposite of for Coinbase, or is it for
Yeah, maybe
Tesla? Like Tesla split 3 4 times. If you're in Tesla, you got burned 1 million times, and it reverse split like 3 times. But
right.
the company said they're not going to do any reverse splits. People got pissed off because they were losing hella money. So you have to really be careful, and you have to watch it like a hawk. Because
Right.
any little things you get screwed big time.
Yeah, and I think that's the reason why I'm not a big fan because of this, because hey, I want, if you are a full-time day trader watching your computer screens, all power to you, right? And but those who are just trying to get into investing, trying to do it along with their job and whatnot, maybe business, maybe someone who's retired. If you don't want to do that, then hey, there are better opportunities. But these instruments have become very popular, and issuers will come out with all these things because they can mint lot of money by selling these things to you. So if you look at expense ratio of MSTY, right, we're looking at so round hill one is like almost 100 basis point, but that's MSTW. Let me see. FMSTY. So if looking at, yeah, expense ratio is like 100 basis points, right? So they mint a lot of money, whether you make it or not, issuers have made their money. So just don't get sucked into the claims of 70% income and 80% income without knowing what's the opportunity cost that you're bearing when you're getting into these instruments. That's what I want to say. It's not a no-brainer stuff. You got to be really careful. Can someone make a lot of money? Sure. But then a lot of people also end up losing their shirt in this. Okay. All right. Sam, you had your hand up. Maybe last question before we get into today's session.
Oh, this is a comment.
Sure.
Are you pissed off with your Google search? I found out that they have this feature called Web. And if you use Web, it's the old Google that we're all used to, very reliable.
I'm not sure where, but I'm pretty happy with my Google search. And today we're gonna, and I'm not the only one, I guess. We thought
Well, they have
search is
Google
dead.
Web. If you ever notice in the tabs on the top,
Yeah.
there's Web, and that's what it means. You don't have all this other fluff.
I mean, there's a web, there's an AI mode that they come up with. So I think I'm so far I'm happy. I don't know where you see as a web. I don't have access to that. Maybe not enabled for me, but I'm pretty happy. And today we're gonna look at Alphabet result. I guess I'm not the only one. Search has been growing. Search is not dead. Contrary to many analysts who thought that 10 blue links will go away, probably the search in their old way is reducing, but Google is still able to make money through their search business. So we'll look into that. It's not that yet. People love it. All right. Okay, so I guess I see comment from Swati says no. Not sure what that relate to, but let's move on with today's session. Welcome everyone. This is our discussion number 285th. Just generally talking about markets and how as a DIY investor, we can all benefit from the capital markets, right? We generally talk about the disparity in the wealth, rich becoming richer and us retail investors are getting left behind. Hey, there is an opportunity. It's an equal level playing field. If we know how to play in the field, it's there for it's out there for us to benefit from the great companies and the greatest capital market of the world, right? It's only for rich. Even we minnows can also play in the same field and sometimes do better than the Wall Street because we have no obligations, we have no chains around us in terms of what we can invest in, what we cannot. We have a permanent capital, we can take a long-term view. We don't have to worry about quarterly performance or yearly performance comparison with a other fund manager. We have none of those issues. We have all the freedom, right? And so I'm here every Saturday, talk about what I'm watching in the market and discuss some companies, discuss some strategies. And that makes me better investor. And thank you for showing up. Cool. All right. Before we talk anything around investing, as always, a disclaimer: anything that we discuss here is not an investment or financial or tax advice. We are all here to learn and then make our own decisions, right? No one is forcing you or me to press the sell or buy button or tap on our cell phones. And I hate the fact when investors lose money and say, it is them, it's the Wall Street people, right? No, come on. No one asked you to buy the stock that has been pumped up. We got greedy, we bought, right? So it's our problem. So don't complain about the markets. Markets are okay. We can't change the market. All we can do is look into ourselves and see, as an investor, what would I like to do, right? So don't complain about the markets. One thing which I learned when I got in investing was, hey, anytime I lose money, I need to go back and say, where did I go wrong? Not that it was a Trump tariff. Guys, why my whole of my portfolio was into the stocks that companies that import a lot. Maybe I missed that stuff. Anyway, so let's starting with the capital markets. We had some developments on the tariffs. So from being risk, we are all concerned about what's going to happen with the tariffs and all that. Administration told 90 deals in 90 days. We hardly had like handful number of deals so far. But this week, we also secured a deal with Japan. The tariff reduced from 25% to 15%. And Japan also made a commitment of investing $550 billion in US, right? So that was a good news. And both US market as well as the Japanese market took it positively. Maybe this could be a framework for other countries. We are hoping. We have yet to see what will happen with other countries. So by the way, Japan had a 4 decades of no returns in their stock market. This peak of Nikkei being around 40,000, close to 39,000, was achieved in 1990. Can you imagine? 1990. This was when the whole real estate bubble was there in Japan in I think late 1980s. At one part of a time, I don't know if it is factually true, but anecdotally, yes, is the palace of the Emperor of Japan was valued more than the whole of California real estate. Can you imagine that? So that was a heydays of real estate and mania in the markets in Japan. And once that corrected, it took it almost 4 decades. It was just in last year or maybe earlier this year when Nikkei crossed the previous all-time high. Coming back to the US side, our economy is fine. When broken. Of course, we have had all these concerns around tariffs and, maybe the tariff hasn't yet shown up. I think that's what I think. But it's not going too good. It's not being broken. It's a Goldilocks economy, we would say, right? So we had a growth that had slowed in the first half of a year as compared to last year. But we also had initial jobless claims that have declined. Right? So it's not that if the growth has slowed down, companies have started to fire a lot of people on overall basis. There are some sectors where we are still seeing a lot of firing going on. The one big tech company announced 15% of employees layoff this week. But that overall, when you look at US market, we still have a stable labor conditions. Right? Retail sales have rose more than expected in June. This we talked about last week. So inflation, still a concern because it's still not at a Fed target of 2%. I think last week we look at CPI, PPI, that was 2.6%. But it's contained. Right? It's still in the right direction. Hasn't reached where Fed wants it to be, but it's not rising. Right? Stagflation is not on horizon right now. I mean, this is what has always scared the market, is the prospect of stagflation. Whereas you have inflation still running hot and there is no growth. I don't think we are worried about stagflation anymore, because that is the worst of both worlds. Right? If you have inflation, that's fine. If inflation get compensated by the growth in GDP, stagflation means GDP is not growing and we have inflation running hot. I think that, at least from a market perspective, that picture is far, far away. It's not on horizon right now. One thing that we should be concerned about is what happens when the impact of tariffs start to show up. I know administration is, quick to get some brownie points saying, look, we put tariffs and no inflation. Right? Our president would like to say 0% inflation. I don't think that is factually true. But they're claiming that inflation has not risen, which is true. But the question is, the impact of tariff may not have started to show up just yet. Companies may still be working through their inventory. Me personally would wait for another 3 months to figure out, maybe in the next quarterly, not even the next one. I think when we have a end of Q3 or maybe Q4, to see what companies have to say about the inflation stuff. Are companies going to raise prices? If not, are they going to eat up? Or are we in a strong enough position to have suppliers suck it up? Right. So I think it's too early to claim victory on inflation. I would maybe wait for another 4 or 5 months to see how inflation goes on. Okay, so this was the initial jobless claim on 4-week average. You see the huge drop down. That's what we're talking about. That labor market is still okay, not that bad. So all eyes are on the Fed. So this week, our president also made a tour of a Fed building, new construction going on. It's costing $3 billion. And while it is not, it's not usual for a president to visit Fed, but it's not unprecedented also. I think the reason was definitely unprecedented. We're trying to figure out, again, I think trying to put pressure on Jerome Powell to cut interest rates. Legally, the only way in which administration or president can fire Jerome, the Fed chair is on the grounds of incompetence, or for a reason. You just can't fire it because you want to bring your own person in. It has to be for a cause. And now what we are wondering is gross mismanagement or cost overruns of Fed building renovation. Could that become a cause for president to take that as a reason and fire Jerome Powell? Who knows? But I think probably we will do more damage to US image than keeping the interest rate maybe until his term expire. Let him work through his term, and then you bring in the new Fed chair. But looking at the other central banks, ECB has been cutting down their policy rates almost every quarter. We did the last one in September 2024. And after that, Fed has kept the interest rates stable. There's been no change. There's a meeting happening, I think it's the next week. There's a Fed meeting, FOMC meeting. And I think after that, it will be probably there's nothing in August because of Jackson Hill summit, and maybe there'll be one in September. I don't think market is expecting any rate cuts in July. It will be a pleasant surprise if we get one, but I don't think anything has been priced in. Let me just let's look at the Fed Watch tool to see what's been priced in. Probabilities. Yeah, nothing priced for July. 96% probability that there's going to be no change in the interest rate. However, in September, market is thinking 70%, 60% probability that we might get 25 basis points cut in September, because I think Fed had mentioned maybe they'll do 2 cuts this year. So if not in July, you might have one in September, and then the next one maybe December. So that might be another tailwind in September, and then in December if you're going to get 2 rate cuts. I think that's what the beige book of Fed had shown earlier, right? Two cuts in 2024 or 2025. All right. So what's been the tailwinds to the market so far? Earnings. We are in the middle of earnings season. So far, so good, right? Of all the companies that have reported earnings, 83% are beating estimates. The market is all about expectations. It's not about the absolute numbers. It's about what your numbers are with respect to what the market was expecting. So you lost money, but you lost less. That's a great thing for the market, right? So 83% are beating the estimates, and they've beaten the estimates or expectations by 7%, right? So which is good. So earnings are so far so good. We didn't see any impact of tariffs overall on the economy, right? 83% companies are still good. Meg 7, where the market is mostly concentrated from S&P 500. S&P 500 is no more, not as diversified as you might think. So if you own a lot of Meta, Microsoft, Apple, the Max 7 in your portfolio as individual stocks, you may want to look at your S&P 500 exposure and see what's the overall percentage that you're holding of these individual stocks. Earnings from Max 7 are projected to grow 14% versus the rest of the 493 companies. Expectation is that they will, as a collective 493 group, will grow only 3%. So a lot of heavy lifting on the earnings side as well as on the market capitalization side is being done by these Mag 7s. So yes, the rally is very narrow, or the financials or the performance, financial performance is very narrow. Other thing is we have the dollar that's been weak, and that bodes well for a lot of companies in S&P 500 because 40% of S&P 500 revenue come from international markets. So, and then when you convert those numbers back to dollar, and if dollar has weakened as compared to last year on a year over year, it's better for you. Even if you have not grown your international business in the nominal terms, you still grown in dollar terms. And when you report the numbers in dollars, which is what these companies would, it shows the growth. Going forward, S&P, the forward price to earnings ratio is 22 times, which is the highest since 2021. So the question is, are we getting too hot? What do you think? I know some of you mentioned that you're being cautious, right? Because maybe the market is too overheated. Great that the earnings, we had an 83% beat in earnings, but still looking at including that forward estimates, we are still at 22 times of PE. Maybe it's still too hot. Maybe the investors are getting into either FOMO or greed and willing to pay up too much, even considering the growth that we are projecting. Right? So there's some charts around from a different Wall Street firms around the speculative mania. Are we seeing the speculations back in the market? Are we seeing some signs of bubble? We'll never know that we are in a bubble until the bubble bursts. Let me make it that straight. We can claim that we are in a bubble and that bubble can continue to become bigger and bigger and bigger, maybe for next 1 year, 2 year, 3 year, who knows? No one knows that. But so we don't know what will happen, but I think it's good to know where we are and what's in the market right now. So there are a lot of red flags that some of these respectable firms of Wall Street, they have shown some numbers. Goldman Sachs, right? So they are looking at speculative trading indicator from a Goldman Sachs is now at its highest level outside of the dot-com mania and the 2021 bubbles. In the normal situation, so this is the highest outside of those two bubbly market scenario. Right now they're looking at 88%. Right? And of course, it's being driven by an explosion in trading volumes for unprofitable stocks. All right, which meme stocks came back to life this week? Come on, anyone? There are a couple of meme stocks that came back to life. Krispy Kreme. You love the donuts. Yeah, exactly. Donut. Right? They came back to life. There is another one, Open Door. Right? I don't think I have a chart for Open Door, but let's bring that up. Look at what happened to Open Door. And of course, there is a one fund manager who's talking about Open Door. And this is another one. You see this candle on Open Door? And this is on a daily basis, right? We're back. AMC, I don't know if AMC has one. So we're back into the, no. AMC hasn't recovered. So we're back into, wherein in traders, speculators who are looking for those heavily shorted stocks. And let's do the same, basically go and do the same playbook which was played in 2021. So many of them, we see a lot of some of these meme stocks making, huge trading volumes. John says, "Menu crispy, I'm down on open." Yeah, I mean, for me, it's fun to watch from the sidelines and see what's happening in the market and let them duke it out. SMX, I'm not sure. What is SMX? SMX. Nothing brings up. Maybe let me go to Think or Swim, and does it show anything? SMX? Oh, okay, no options. These like low volume, wow. This seems to be a reverse split, reverse split, reverse split. I have no idea what this is, right? Won't even touch it. So, yeah, these are the signs which is like, come on. People are just playing. This is a casino. It's basically casino mentality. Animal spirits are back in the market, right? Oh yeah, extreme short squeeze in the most shorted stocks. Right. Let's stick it to those hedge funds who are trying to short the stock. Call options now account for 61% of all options activity, right? Try to do a gamma squeeze on the short stock. Buy out of a money call. Market makers will buy the stock to basically become delta neutral. Buying the stock will raise the price. That will squeeze those hedge funds who are short, and they'll buy to cover their shorts, and you rinse and repeat. That's what we saw in GME. Now we are back into the kind of a similar mode. Maybe with a new name. Santa says GME. Did GME also had the same speculation? Nah, nothing. No, we found a new toys to play with, right? New stocks to play with now. We got a donut, we got an open door. Probably we'll find few others, right? M. Sharma says, said again, you have a slide. I don't have a slide for gamma squeeze. I mean, this is just search for gamma squeeze and how gamma squeeze happens. If you buy, the market makers try to say delta neutral, right? When we say Jane Street or any of the market makers, Citadel, etc., they don't want to take any position whether the market is going up or down, whether stock is going up or down. They always want to say neutral, delta neutral, and if you buy call options, they will sell you the call option and buy the shares. So just Google for gamma squeeze. This was all over the news in 2021 when a lot of retail investors were like, okay, what this new term is. So so Bank of America is saying we're getting bigger retail and we are looking at a bigger bubble. And few of the things are because in the world over, policy rates are falling. In US, not yet, but we're having a easy money coming back in the markets. Central banks across the world are lowering their interest rates. And that's why DJT is so pissed off because our Fed is not lowering the interest rate. Right? Number two, we talked about last week that we have an executive order. They're working on executive order to allow private equity. I would say it's not just private equity, private credit, alternatives, which means including crypto, into your 401k. Right? 401k is supposed to be very safe, no-brainer assets. Now we're trying to get and liquid assets. Now administration say, let's open it up for alternative assets also. And regulators are also exploring to ease the day trading rules, right? So if you have a less than $25,000, and I've never been flagged for day trading, but I think if you do 3 day trades in what, 5 days or something like that, you are flagged as a PDT, pattern day trader, right? And now, so if you have a smaller account, which many retail investors would have it, then you get flagged as a pattern day trader. And I think probably there is some things that you may not be able to do. Ramesh, like 3 in 5 days. Yeah. So I don't think I ever got flagged. But anyway, my account is much bigger than that, but I don't have a need to do those day trades. But if we are lowering these margin requirements, right, then many of our retail investors can actually continue to do day trades and not get flagged as a PDT. Right? To me, that sounds like, hey, more power to retail investors, but it's becoming a lot more trying to get in and out, do more day trades. Works for you, fine, may not work for someone else. So Bank of America says bigger retail, bigger liquidity, higher volatility, bigger bubble. If you look at an option side, now I think close to 60% of the option trades on SPX are 0 DTE. That means more and more option trades is basically just betting on what's going to happen today on SPX, right? And once the day is over, new day rolls in. Okay, let's bet what's going to happen today, right? Very short-term focus. It's like a lottery ticket. If it works out, great, you made decent amount. If not, hell, I lost less. Of course, if you do risk-defined option strategies, then you know what your overall exposure is. And if you want to play that game, sure. And looks like many retail investors are willing to play that game. If you look into the overall, the type of a contracts and the duration of those contracts that are getting traded, majority of the contracts that get traded on SPX are 0 DTEs. And this product is what, 2-year or 3-year old? I think introduced in 2021, etc. So anyway, so that's another reason why I was saying, hey, is there too much of speculative mania going on? Third one, Apollo, Thorsten Sloch says the AI bubble may be surpassing 1999 tech peak. So the PE ratio for top 10 S&P 500 companies is now higher than during the peak of dot-com era. That in itself, I'm not sure that in itself tells us that it's a bubble, because the companies in the dot-com eras were different. Most of them were unprofitable companies. Many of them did not even have a business plan, right? They were just valued based on whatever they put it on behind the napkin, right? They did not have a real business. The companies that we are seeing right now are much better companies. So I don't think it is that we can just compare saying now the PE ratio is higher than when it was, and hence it is a bubble, right? JP Morgan says red flag for broader market, and they are looking at S&P of P of 26. Again, I would say this is a little lazy work. Just looking at a P and say, oh, the P is high, so the markets are expensive. If that's the way you want to invest in, probably would have stayed out of the market for last 10, 15 years and would have missed in all the growth of past 15 years. Right? Historically, if you go back and look at on a decade wise, the PE market is willing to pay up higher multiple over the past few decades. Right? Companies in 1960s were all industrial companies, need a lot of capital to grow. So the return on invested capital in those sort of businesses were very different. Today, businesses are different. So I can't compare saying my historical average was 18 because that average includes some of those businesses which were, though profitable, but when it comes to the return on investment, pathetic businesses. Now the S&P, the top part of S&P is dominated by the businesses which are very different. That doesn't mean to say that we cannot have a mania in this one as well, but I'm saying just by looking at a PE is kind of a little lazy work. Right? But I just want to bring it up because that's what the market, a lot of Wall Street firms are talking about. Yardeni, again, a very respected one, and he's saying it's a slow motion melt up. I don't think he's saying that we're in a bubble. But if you really look at it, this is one of the most hated rally. The 2025 rally has been the hated ones. The other one which was very hated was 2023 rally. Because after 2022, almost all the firms of the Wall Street, the consensus on the Wall Street was that we are going to enter into recession in 2023. So all the strategists from the top Wall Street firms were telling their clients, be safe, probably we're going to enter into recession. And, they kind of did not deploy the capital as much as they should have. So that was a very hated rally. And then 2024, everyone made money. A lot of bears of 2023 switched to bull of 2024. And now, after tariff, a lot of that big money was stayed out saying, oh, come on. What are we going to do in the market? We're going to now upset the whole world order in terms of how the economy, the integrated economy, we're going to just upset it by these tariffs. That's crazy stuff. That's never going to end up well, right? And the markets have done nothing but gone higher from April's second week. We are up, more than 30% since then. It's been a very hated rally. And now, if for someone who got out at the bottom and is trying to figure out when should I get in, it's not easy. But there are other factors which, it's a slow motion. It's going up. It's not that we are over the last, let's go back to SPY, right? We haven't had big movements, right? 1%, less than, so over the last few days, these are all less than 1% movements. Right? Slowly, we're grinding up. I don't know how long will this continue. I never expected that we're going to have this, V-shaped rally. But what do I know? If I were to build, and I think there's a lesson for all of us is, don't build your portfolio or don't take actions in a portfolio assuming that you know what's going to come in future. This is a very humbling experience for someone who thought that, or all the economists who had already predicted and projected that these tariffs, etc., are going to be disastrous for US companies. And markets we're going to enter into bear recession or whatever. Nobody knows anything. Let me put it that way. I don't know what's going to happen. You don't know what's going to happen. Neither the folks who come on CNBC and Bloomberg have any idea what's going to happen in the markets. I found it very funny when, after the initial declaration that we're going to have, or that Liberation Day announcement, Goldman Sachs came back and, changed their targets for the year end, S&P 500. And then when they started, these huge spikes in the market on 9th of April and market going up, they kept on again revising it. Come on, guys, what's the point of giving a target if you have to revise it every week? Because they also don't know much. So I think it's a foolish errand trying to predict where the S&P would be. And I get asked this question many times when someone knows, oh, I am a full-time investor, and like, okay, what do you think Mark will do? They say, I have no idea. Right? And then they think that I'm like blowing them up. Come on, I just want to be truthful. I have no idea what market's gonna do this year. And I don't want to build my portfolio in which I have to know what the market is gonna do this year. I don't control the markets. All I control is what I own in my portfolio and what my needs are and how do I, modify the bullishness or bearishness of my portfolio. That's in my control. That's what I want to focus on. I don't want to focus on whether S&P will be 6,700 or whether it will be 550 end of this year. Who knows? I have no idea. John said GM is complaining parts are expensive due to inflation from tariff. I think GM and the Ford, they started complaining more after the Japanese deal. It is because GM and Ford both have, or they import a lot of components in the cars from Mexico and Canada, and they end up paying 25%, whereas the Japanese car companies, when they will be importing to US, they'll be paying 15%. I think that's where they were like up in the arms shouting about, come on, this deal is no good for American auto manufacturers. So yes, even I think Tesla has mentioned that they are seeing a impact due to tariffs, but I still say, I think barring a few companies, I think there's still the impact of tariff has yet to show up fully. We will see it once the consumer staples, etc., start to increase their prices, or we see that their margins start to squeeze up, right? Your General Mills, your Campbell's, your Walmarts, the retailers. I'm waiting to hear from retailers on what's the impact of or what they are seeing in their consumer or what the pricing, etc., that they are seeing from their suppliers. Then I'll know what's the impact of inflation, because that's going to hit much bigger population. Fear and greed index. We are on number 7. We are on still greed. We were extreme, probably very close to extreme greed. And when there is a greed in the market, it's time to be cautious. There are two things that kill investors in the market: either the fear or greed. Because of fear, we just stay out. We never enter into the market. Because of a greed, we enter into the market or we increase our positions when it is the worst time to do it. Try to get control on both. Markets over the last 150 years of its history has over a long time has gone nowhere but one direction, which is up. That doesn't mean it's a smooth ride up. It's going to be ups and downs. That's always happens. It's like this. So don't give in to FOMO. Don't give in to fear. I personally would want to go out with my shopping list when this dial moves towards a fear and extreme fear. Right? If I have my watch list, I'm waiting. It's not that I'm selling my portfolio because I don't know where the market might continue to go high. Who knows? Right? But I'll wait and go out with my shopping list when everyone is selling the companies that I want to own at a cheaper price just because there's a fear in the market. Yeah. Sector-wise, S&P 500 overall pretty good, right? 8%. Who would have thought that after being down 20% drawdown during April, we were in a bear market. And now we are up 8% for the year. And the biggest sectors are industrial, driven by a handful of companies involved in production of equipment related to energy. And then, of course, the information and the communication services. They came back roaring up. Things that have not worked out so far is around healthcare sector and discretionary. Discretionary largely Tesla and luxury goods, etc. China, lot of dependent on China, and China has not recovered. But I won't complain. Markets are doing good, and I think we should all be thankful that after getting 2 years of 20 plus return, we are what, 7 months into this year, and we are 8% down. We didn't have to do anything, no try, even if we don't have to try to find out the next biggest hot stock, which is gonna do 10x. If we had just invested in a S&P 500, which means zero effort from our side, been pretty good, right? And sleep well. So what did I buy or sell this week? Stock? Nothing. Okay. And again, even if there's something that's not a recommendation, I just want to be a little transparent of what I did this week when it comes to my stock purchases. Right. So that brings us to the earnings next week. This is the earnings season, and next week, big companies. 40% of the S&P 500 are reporting results. It's going to be a big earnings week and going to keep me busy because you got to, I think these are the companies that I am definitely going to review for my own portfolio. PayPal, Boeing, Meta, Microsoft, Apple, Amazon. Boeing probably not that getting into the details, but yeah, these are the big ones. Which ones are you guys watching? The lot of Max, some 4 out of 7 Max 7s are reporting this week. UNH, healthcare. I think UNH just can't find the bottom, man. There was a news around UNH, some DOJ issues around UNH. I know they were being investigated earlier, but this week again some new news have come on UNH. Sometimes you feel that maybe is this become a value stock? Right. Again, I don't understand this healthcare space very closely, so I'm still staying out. Probably I will do. Come on, it's a think or same. As always on the weekends. So let's go to UNH. UNH and sheesh. Yeah, it's back to 281. Right? Like cutting down like almost 2/3. Yeah, and I think a lot of value investors are looking at this company and say, how far can it go? And this is one of a big drag on, I guess, Dow Jones also. Anyway, so how's it looking at? Let me just look at the stats and see. Wow. If you just look at a PE side, it's like half of the S&P 500. Right. But of course, this is all looking backwards, a PE ratio forward, and we don't know how it's going to happen with all this DOJ investigation, and if they say there is an unholy nexus or not, basically practices, with Optum and United Healthcare basically controlling the whole ecosystem, which was their USP, which was how they were able to grow so big with the margins. And if DOJ says that anti-competitive or whatever, that's going to be bad. So I'm not getting into UNH anytime soon. Maybe if I were to do it, I'll probably take XLV as a healthcare. Again, I don't have much competency or much information around the healthcare, so I will stay out. Reddit, RDDT. How's Reddit doing? I mean, Reddit stock has been kind of a sideways over past few months, because I remember after the initial IPO, it went up really fine, and now it's yeah, it's been kind of a trading over the last since last October back where it was. Net, which is Cloudflare. This is a company that I've somehow never bought it or never studied it, but there's been a amazing ride on this. Now they become kind of a gatekeeper for a lot of internet-based traffic, which is amazing. But I have never looked into this as a business. Right? Oh, so wow. I heard a lot about this net around 2021. Glad that I didn't take position at the top, but I never studied the business. If I had, then maybe it was a good time. I could have bought something at 2023, but all that is now water under the bridge. Who cares? There is no fun in crying on something that you have missed. But yeah, Asif, if you know about this company, cool. It's been a good run, man, on this one. How about the healthcare, other health stocks, CNC? Is it Centene? Wow. I have no idea. I've never owned this company. Little bit choppy. Yeah, come on. 1% operating margin. These are like the margins of Walmart probably has a better margins than this. I'm not interested in this business as such. Will AI overviews from Google hurt Reddit? I think Reddit has a partnership with Google to supply them with the content. And
Supply
who
them
knows
with
that a lot of that.
data.
Sorry?
Google supplies them data for their AI models, which they are using to do AI overviews. But if you get your answer from AI overviews, will you ever go to Reddit? So that can hurt Reddit's mouse. So
No, I think it's not Google doesn't supply the data. I think the Reddit supplies the data to Google.
yeah, that's what I said.
Okay. Yeah. So the idea is if you can make money through the distribution channel, this is which via Google, do you really need to make the money through the advertising, which is in getting people on your own property? I think that's the stuff that the balance that they need to look at. I don't think, I mean, if it becomes a de facto supplier of data and not be an end destination, they can still make money. And I think that's what the Reddit investment thesis was never that they'll become as big in advertising as, let's say, Instagram, even though they tried a lot, right? Even though they tried, the reason they didn't go IPO was the business was not that attractive to the Wall Street, because if your model was only advertising, they have a lot of original content, there are a lot of users, but when you talk about advertising, you're competing against the Facebooks and the Googles of the world. Thank God we had OpenAI, which brought in ChatGPT, and then we realized, come on, to train these LLM models, we need original content. That turned around the future story of Reddit. From being making money through advertisement, they can make money by licensing the original content. So I would be pretty happy. Again, I don't own any positions in Reddit, but I would be pretty okay if that story continues to play out. And I know at some point of time, I think all these LLM providers are looking at how to generate synthetic data, which is equivalent to real world data, so that they don't have to pay data licensing fee. But for so far, from a Reddit perspective, I think ChatGPT was a lifesaver for them. Otherwise, they probably wouldn't have come IPO. Then they realized this is the time, let's go IPO. Right? They signed up a deals with Google and went IPO. Right? So, as an investor, if you're looking at it, I think you should look at both the sides, not just on if the traffic on Reddit, I mean, the discussions that you have on a Reddit will continue to be there. The new content that we are putting on Reddit, right? Google, you're only consuming it. You're not adding. I'm not asking question Q&A with the other users. That will still stay on Reddit, right? So, but the data licensing deal may be a lot more lucrative. Aditya, are you exiting your option position? These Amazon, Microsoft. I don't have anything on Amazon. I don't have anything on Microsoft. I may put a position close to earnings for September expiration, but right now I have nothing. All right, so let's move on. I think those are all the stocks. So what's next? Let's look at the crypto market. Overall, Bitcoin actually took a dip. It was down to 115K because I think on Galaxy Digital, or was it Gemini? I think it was Galaxy Digital. They sold 80,000 Bitcoins, probably the ones that the whale had moved to the exchanges. I guess those numbers were sold, but then it quickly recovered. This is as of 2 hours ago, or maybe 3 hours ago. Let's look at what may be the latest numbers, because this market is open. Crypto market is open. Not much change. So again, I think it's been trading sideways. We did have some, not this week, but the last prior week, we had some good traction on Ethereum, etc. And that's been the story of this month, because a lot of companies are now becoming Ethereum treasury companies. So let's look at it. This is what concerns me. I'm reminded of 2017 mania, when an iced tea company in a Long Island that became Long Island blockchain company, and the stock was up like 200% or whatever, few 100%. And now everyone is trying to play the micro strategy game. And this is just this previous week. And I think last week I shared the table of how many companies announced treasury operations last week. This is now getting out of control. So every company, doesn't matter what your original business is, they're just announcing, hey, I'm raising these funds to become a Bitcoin treasury company or Ethereum treasury company. I can somehow understand why you would want to have a Bitcoin and Ethereum on your balance sheet as a treasurer, but now we're pulling it to the extreme. So power sports company acquiring, they raised $500 million and they've already spent $375 million to acquire Bitcoin. I hope there are no CFOs or treasurers out here, because I don't have much respect for some of the treasurers of these companies, right? Upexi, this has been company formed to just hold Solana. Is Solana store of wealth? I don't know. It's a layer one that goes down, I don't know, God forsaken, what, 6-7 times? Why would you want to put your wealth in something that can go down, and then can be brought back up by a bunch of validators? I don't understand. But when the market is willing to give you premium over your net asset value of your holdings, who cares? Let's sell some shares to the market. Trump Media Technology, I mean, they have announced long back, and now they're saying they approximately bought Bitcoin. Bitmine, Tom Lee is now chairman of this company. Now he's out there and saying, pumping up, I shouldn't use the word pumping up, but saying good things about this company and how the Ether is going to be a bigger stuff than Bitcoin. So Bitmine Immersion, BMNR, they announced their treasury holdings, and that's on Ether. Where is BMNR? Let's go back. BMNR. This is when the Tom Lee come in, and I'm still waiting to see when the pipe investors, etc., will exit and what happened to these companies. There is a new Solana company, Accelerate, seeking $1.5 billion. For what? There's a company that was involved in carbon management, development, investment, sale of environmental assets, DevStream. Now and I understand with the new administration, a lot of these environmental ESG related companies are having tough time to raise any funds, right? The whole ESG narrative has been thrown out. So what do you do if you are ESG company? You become a treasury company, crypto treasury company, and I don't think they've even announced what they're going to do. Wintry Therapeutics. This is a biotech company. It's NASDAQ listed, so probably there is a share for this. Windtree. Oh, there we go. Right. Sure. At some point of time, you earned $700 and now you are at 98 cents. How can you get some traction in your shares? All right, let's become a BNB treasury company. Oh, bad. I don't know what's happening. The Smarter Web company, this looks like to be a company that makes websites, a web design firm. What is that to do with? Okay, I can digest. Why would company want to hold a BTC and not US Treasury? Hey, look at the history of BTC and what's happening. World is now converged to a point where they think BTC has got a store of value. And I want to have something on my treasury which will hold its value, right? I can agree to that. I can agree to some extent that yes, Ethereum also you can have it, but BNB, are you now you're getting beholden to Shangpeng Zhao? Come on. What's next? Are we gonna get a treasury company or Fartcoin? Dogecoin? Probably yes. Because right now the market is like the moment you announce your treasury stuff and all that, market will start giving valuation to your company, which is like how MicroStrategy has, more than the value of your holdings. So why not? Let's do it. We did it during SPAC, and now we are doing on this crypto treasury. We also had a pump.fun's ICO this recently. All their tokens were sold out in 12 minutes and they raised close to $500 million. Of course, US investors were, or I shouldn't call investors, US traders / speculators were not allowed to participate because it is illegal. But the world over, 12 minutes, they raised $500 million. It was priced at 4 cents. And now it has crashed back to, I think, 2 cents, 2.5 cents. Yeah, not 4 cents, 0.004 dollars, like 1,000, 4 thousandths of a cent. So this does tell me there's some speculative mania here as well, right? Pump.fun basically gives you a platform to create meme coins at a will. If you're not a Solidity developer, which is what Ethereum's language, go to pump.fun. Probably this is a no-code platform to create meme coins. Go to Twitter, YouTube, hype up your coin, and if it becomes 1,000%, dump it up on the retail investor. This is pretty well established standard operating procedure for most of the meme coins. So be very careful if you want to play in this sector. The thing that I really want to focus on are on what's happening on the legislation side. So we are 1 down, 2 remaining. Genius Act has become a law. Clarity Act in the House, it was passed in House. Senate still working on in an equivalent bill. And anti-CBDC, again, it was passed in the House, but nothing on the Senate side. So, and third thing, I think I saw today morning, probably I'll add it for the next week, which I want to track is they're going to write the whole digital strategy paper from the AI and the crypto work group of administration that will be out by end of this month. So we should see what the government is planning to focus on as a digital asset strategy, which will also include your crypto reserve strategy. I would not call it as a Bitcoin reserve because I guess there could be other assets also. I'll not be shocked if it has got a Trump coin or Melania coin, but I pray that they don't have those things. So that's on the crypto side. All right, I see some questions on Samsung astronomer.io. Is that the same guy who got kiss cam scandal? If that's because that was the company astronomer.
And Vivek, so on Monday I was taking this free shuttle to Foster City, and I read this article about those two. Right, I had to read it over and over, but it didn't say anything. It just said that the kiss cam caught them. There were two people, so it took until Thursday. But what is the company doing?
Who cares?
The company?
Yeah, who cares what the company did? I mean, the whole
No,
interest.
what is the company doing? I put it in the chat. What are they doing?
I didn't even look at that, and nobody cares what the company does. I think
Oh,
they.
we don't care.
I
So
don't.
just ignore it.
Yeah.
Okay.
Yeah. This was all fun, right? It's like a gossip machine working overtime. The moment they were caught, we would have seen I don't discuss these things. There are a lot of other on like friends WhatsApp, etc. We were particularly look at the creativity of Twitter people, right? They use that and came up with so many memes within 24 hours of that stuff. But yeah, I don't care what the company does. It was a fun, a little bit of enjoyment. And nowadays Twitter just blows up on these things. Rutva Pandit say, what coins are these companies they buying? Some of them were specified that we are Solana, we are Bitcoin Treasury, or we are what coin treasury we are. I think the one that I did not see they specified anything was DevStream. But I'm not even concerned, or I don't care whatever they do. This is like a crazy stuff happening and might continue, right? Because everyone wants to cash in on, oh gosh, Bitcoin is going to million or whatever the number, Kathy Wood and Michael Saylor are putting in. That doesn't mean everything else is also gonna go to million. But we have seen this in cycles. The leader goes first, then the altcoin will pump up, which haven't happened so far. But this week, if you go and look at a Google search trends, suddenly there was a lot of interest from retail investors on altcoins. So the pump that lot of crypto investors slash traders slash speculators have been waiting for, it may arrive. That did not happen. We've been like folks are waiting for last 6 months on how Bitcoin has hit a new all-time high at 110K. Now it's the time for altcoin to shine. Nothing happened. Ethereum is still lower than its all-time high that it had achieved in 2021. Right? And the other coins are still way low. And now maybe they are thinking it's altcoin season is gonna come back up because of all these mania. Right? All right, so let's move on to the next section, which is Lam Research, and then a couple of earnings. Cool. And then we'll open up for breakout discussions on whatever you want to talk about. Or if you don't want to go through earnings and want to chit chat, do let me know. But let's start with Lam Research. Ravi, you still there? This was your baby. All right, is there.
Yes, boss. I'm still here. Thank you,
All
though.
right, no worries. Okay, so let's talk.
Vivek,
Yeah.
my brother-in-law has worked at Lam Research. The stock was in the teens.
Oh, great. If he held his stock, he's in happy camper. And maybe you can have him evaluate how I presented Lam Research. I've never worked in Lam Research and never had any position in Lam Research. Ravi wanted to do a deep dive into Lam Research, so there we are. This is my 3-hour, 4-hour work in trying to understand what Lam Research does. Okay. So gonna go through, before we dive into Lam Research, I want to look at overall semiconductor chip manufacturing, very brief overview, because Lam Research is one company in the overall supply chain, which is very complex. I want to go through company overview, business model, products, leadership, who is the competition, financials, KPIs, capital allocation / acquisitions, tailwind, headwind, industry, how the overall other companies in the same industry, how they do, and finally questions for how, if you want to invest in, what are the questions you need to ask yourself. All right. Semiconductor value chain, very simplistic way. You get a wafer, you have a chips that you fabricate on a wafer, and then you basically have your packaging, and then you sell the chips. What we see is not even, I mean, if you open up your desktop computer or laptop, this is what you see, right? But there's a lot of steps that happen, and this is how it starts. You got a wafers, you cut those you got a ingot, you cut the ingot into the wafers, polish it, and then you apply some chemicals, deposit some chemicals. Then you run through EUV lithography steps, either it's EUV or DUV. Then you etch it using chemicals and remove the deposits so that those circuits get printed. Then you deposit ion, and then you clean it up, and then you cut down those chips into the size. Then you package it. On the packaging means now you basically get its legs out and put it the heat sink and all that stuff to be shipped where this chip's gonna get used. Very brief 30-second explanation of very, very complicated process. Lot of companies are involved in this. ASML comes in this step, and then Lam Research comes in the step of where you have to deposit, and then you start on etching, right? These processes. Overall, semiconductor industry is a very capital intensive. This is what killed Intel, right? TSMC is committing $60 billion, $100 billion investment because they're building plants. It's a hugely capital intensive industry, and it's also cyclical. Right? Now, over the last 2-3 years, after AI coming in, semiconductor analysts are now thinking, / investors now thinking, maybe it is in a secular, it's become a secular industry, not a cyclical. Because the AI chips will continuously see more and more demand. Maybe it has turned from being a cyclical to a secular industry. We'll see. But historically, it has been a very cyclical industry. You will see a lot of investments going in because there's a lot of demand for the chips. And when the demand stays out, the plateaus, then no more investments going in, and then you'll see the demand for these new machines, etc., that is required in the chip making goes down, and then suddenly the new tech innovation will come in. You want more and more chips. We have seen this throughout the technology innovation of starting with the PC, then the next revolution came in through mobile. Then for a cloud, we found out faster chips, data processing, big data revolution, and now we are looking at an AI. Maybe now it's a turn into secular, we'll know. And so the earlier quarterly can be volatile. And if you have gone through, I think we talked about during the ASML earnings review, don't look at what's happening quarter to quarter. I would say don't even look at what's happening in 1 year to another. We have to take much longer view because these projects take a lot of time to implement. When you start on your fab, it will take a few years before the fab comes online. And let's say TSMC have 11 fabs that they're building in Taiwan. They're building 6 fabs in US, Germany, Japan. And their plans are like, this fab will be operational in 2030, 2028. Right? So if you're trying to get only 1 year quarterly view, that's very short-term view. Let's get back to Lam Research. It's a key player, and it's focusing on etching, deposition, and cleaning part of that overall manufacturing process, right? Founded in 1980, headquartered in California, specialized in vapor fabrication equipment, which does a deposition, etching, and cleaning stuff. Global operations, strong R&D. I looked into their financial document. They spent close to 13 to 15% of revenue on R&D, which is huge. And currently, there are tailwinds due to AI and IoT, which is basically chips in everything. You want your refrigerator to come and talk to you and tell you or let you know that I'm running out of milk, right? So there are chips in everything. Your microwave, your drapes are now controlled by your AI, and which continuously look outside and see is it getting dark or not. All have chips in it. Their business model, they earn their revenue by two ways. One is you sell your systems, which is advanced fabrication systems of chip manufacturers. When I say chip manufacturers, there are a handful of them. TSMC, Samsung, Global Foundries, and these are the three big. Intel, how can I forget Intel? Right? There are a handful of these chip manufacturers, the big ones. And of course, it is highly sensitive to the capital expenditure cycle within the wafer fabrication equipment market. Right now, TSMC is building plants because the US is saying, if you don't manufacture in US, we're going to tariff you. Right. 5 years down the line, 6 years down the line, they may not be building new plants because they've already built so much capacity. So you might see a little bit of a cyclical nature, and it is dependent on the capital expenditure cycles of the companies that are building fabs. Second business model is they earn revenue through customer support services. Once you've installed those machines, those need to be maintained, sometimes upgraded. Problem comes in, right? So you have basically provide them a support services, spare parts, and all that stuff. So if you have a big install base, this will give you consistent income, right? Just for the upkeep of the machines. Looking at the revenue trailing 12 month, maybe around 60% come from a system sale and 40% come from, it's close to what is $17 billion, 10 billion out of 17. What's that percent? Whatever. 65%, and the rest comes from customer support. So it's not minuscule. The products they have, and just if you Google for Lam Research, they have products on the etching side, Keo and Versus. Not that the names matter, but I thought you should know. Deposition, Alter, Striker, Saber, cleaning side, they have some products, right? Leadership, Tim Archer has been the president as CEO. He holds 125,000 shares. CFO has got 103,000 shares, and Vice EVP of Customer Support Business Group has 50K shares. I just want to make sure that management has some skin in the game. Competition, they got Applied Materials. They're not the only game in the town. They have the Applied Materials, which is both in etching and deposition. They've got Tokyo Electron, which is in etching and cleaning. And there are some very specific players which specialize in specific applications. So unlike, let's say, ASML, which is the only player in EUV segment, there is competition for Lam Research. So AMAT is a ticker for Applied Material, is in the similar business as Lam Research. Looking at their financial highlights, I pulled in the last 10 years of data, right? Year over year, not that great. So this is basically year ending 2024. So maybe, gosh, we could have waited for another couple of weeks. Then we would have gotten the year ending 2025, right? So, but looking at 3-year, 5-year CAGR, still okay, 9%, 10% growth. Thing to note is from their it's like close to 30% operating margin business, despite being a big manufacturing concern, still able to get 30% operating margin, which is good. It means they're not crazily, they are good, in terms of managing their expenses, almost high 40s of gross margin. Want to look at their free cash flow, always been generating free cash flow positive. What else? I guess that's it. Again, the revenue growth will depend on the overall AI cycle and the capital expenditure. So now with all these companies building fabs, maybe 2024, 2025 might turn out to be a better year than 2024, right? Decent return on invested capital. So I don't have any concerns on the financials, except the fact that it is dependent on the capex cycle of fab operators, which historically have tend to be cyclical. But we'll have to see if it become a secular going forward. Quarter-wise, this gives you a little better picture because we have a results for a quarter ending March. Quarter-over-quarter growth, year-over-year growth on the quarter was pretty decent. Right? 24%, 28% growth in gross profits. Same, no margin deceleration, high 40s margin and operating margin 30s to mid 30s. I don't think I have any concerns on the financial side. So pretty good on the financial side. Looking at little longer picture, same stuff going back 15 years, they actually pay dividend. You got a close to a % dividend yield, and they're also buying back the shares, right? So when you're looking at a total return as a shareholder, you look at what's my capital appreciation, your dividend income that you're getting in, and of course your buyback yield, right? So sorry, free cash flow yield, buyback yield, and dividend side, right? So they've been pretty good. On this framework, the more greens I see, the better it makes, the better inspires a confidence in the company, right? It's not that it's the end decision, but yeah, this is a company that I would like to research, and given the other facts in my portfolio, if I have a space, yeah, this is a company that is okay to spend more time on. I can tell you, many times there are some companies which you guys ask me to review. I look at this, I'm like, I don't want to waste my time on this company, right? This is not one of them. It does deserve serious consideration, and given other things which we'll talk about in the last, it's a decent enough company. Okay, looking at trailing 12 months, systems growth have been decent over the last 2 quarters. So I think after the slowdown between 2023 and 2024, that's where when we started putting export restrictions control on China, and a lot of these companies that supply equipment to Chinese fabrication companies were caught off guard. ASML had the similar issues because they suddenly couldn't supply their lithography machines to China, and then kind of a 2024 year was washout year, almost no growth in 2024. I guess they also had a similar stuff over the maybe 2024 side. Now we will see the results. Probably we'll see some more growth, right? But nothing concerned here. Acquisition perspective, I went back and look at how they're growing the revenue. One way to grow the revenue is let's buy other companies, right? Once you buy other companies, their revenue start to show up in your financial statements. Hey, I am up 15%. But did you grow organically? Or did you just went and bought a bunch of companies because you want, as a CEO, you wanted to expand your empire? This seems to be pretty conservative in terms of buying. All they bought was all the companies that are in related businesses, right? These are called bolt-on acquisitions, which is, hey, I am in this business and the company that I want to acquire fits right onto my existing business model. I love the companies who do these kind of acquisitions. I'm a little more skeptical about the companies which are in this unrelated areas to fuel revenue growth. Yeah, I'm a biotech company. I bought a fintech company to fuel my growth. Not interested. That's not a good use of capital. Right? So this one, I think it's a I would say it's a decent use of capital. So no concern on that. Brownie points to the CFO for being very disciplined in acquisition. I can tell you, having so much of having cash on balance sheet is like, how do I put it that way? It's like you go into casino and you have a wads of bills and you're not sitting on any table. It's so tempting to use your cash to fuel your growth. But because, and we have seen many companies just go out and just buy other companies, whether it makes sense or not. All right. Next one, looking at the tailwinds and the headwinds, let's go to the tailwinds. What are the tailwinds on this business? AI, ML driving demand for chips, IoT, 5G adoption, increasing complexity of chip manufacturing means you'll need more and more of these machines. Government incentives, CHIPS Act in US, and US government's focus on made in America. Headwinds, cyclicality, we talked about it, geopolitical tensions, which actually has shown up in the financials of Lam Research. Competition, they're not the only game. And of course, high R&D costs. They have to spend almost 13 to 15% of the revenue on R&D to continuously, because there's so much innovation happening on the chip side that everyone in the supply chain have to consistently catch up to that, right? Moore's law. And then of course, customer concentration risk, which I think is okay because that applies to everyone in this, whoever is supplying to the fab industries. There are a handful of fabrication companies, so they'll always be there. But some part of a time, if you're dependent on one big customer, you don't have much pricing power. And we are seeing this with other companies in this chain also, in semiconductor supply chain. Overall industry side, so I went ahead and pulled up like semiconductor companies, right? Names that we have heard of: NVIDIA, TSMC, Kellanor, KLAC, Broadcom, Texas Instruments, ASML, Lam Research, blah, 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 right? Look at, this is why NVIDIA is a different business. Of course, it doesn't manufacture the chip, so it's not a manufacturing company, so I don't think it's fair to compare NVIDIA with Lam Research, but 50% operating margin, 48% free cash flow. It's a big free cash flow generation machine. So overall, I think there are some companies which are either really big and have kind of a monopoly, either through the technology or through their, or not monopoly, or at least the big moat around their business, enjoy much better operating margins than some of the other companies, right? Look at, this is the sad part, Intel. Seeing at the bottom, negative operating margins, have done nothing. Looking at how the stocks has performed, right? I don't know, where did oh, it's been sorted with a name. Gosh, could have done it in 1 year. Right? This is how their stocks have performed over a year. Looking at Intel down 30%, ASML down 22%, AMAT down 14%, Lam Research comparatively done better, at least over the 1 year, being almost, has gone nowhere, but at least better with some of the other competitors or companies in the similar area. And again, both from AMAT and ASML, the concerns have been the export control restrictions, right? So, haven't looked at so far. If you want to invest in, these are the things you need to ask yourself. Number one, what is the trajectory of fabrication industry next 5 years, 10 years? That is very important. If it really turns out to be a secular, yeah, then the demand will continue to be there. But if it really turns out to be a cyclical industry, what happens if AI boom become bust? 3 years down the line, we realize, oh gosh, the $350 billion that all these big tech companies have spent, we're finding it difficult to make money on the $350 of $350 billion. What happens then? I don't know whether it's true or not, but this is how you need to think through it. And see if that happens, they will pull back on the capex. If they pull back on capex, fewer chips will be needed. If that is the case, TSMC will pull back on its expansion, or Samsung will create fewer chips. They will pull back on their capex, which is directly going to impact companies like Lam Research. Can it continue its manufacturing leadership with the increasing complexity of chip manufacturing? Right? Maybe if they continue to spend on R&D as they are, probably. Right? How much of business coming from China? How will it impact with tariff and export restrictions? Right? For Lam Research, 1/3 of his business is coming from China. And let's say if you don't get a good deal, and this is the hot topic for you as an investor, if you are investing in this or thinking, you need to really know there could be short-term volatility in this stock, either up or down. If you don't get a deal with China, 33% of the business of Lam Research is at risk. Maybe Applied Material could be a better bet. It has got only 25% revenue coming from China. Right? Other question you need to think through it, which is, I don't think apply to the company as such, but overall portfolio. Is it better than some other companies that you hold in your portfolio? Sometimes the best company to add in your portfolio could just be the company that you already have in your portfolio because the business is doing great. Does this provide diversification to your portfolio? If in your portfolio, majority of the companies you hold are these, do you really want to add one Lam Research? Only you can get to the answer. I can't tell you. And of course, other questions around portfolio management. The last thing which is specific to stock is, it's been a volatile stock. If I look at last 1 year, it's been down 40%. Some part in the last 1 year, I think that probably was during the tariff scare. Look at last 5 years, it had a drawdown of almost 60%. Can your portfolio, and more important, you can go through this gut-wrenching drawdown and not get scared out? Because given everything, you find it's a great company, love this, it does buyback, it also gives a dividend, it's a cash flow positive company, and a handful of competition. It's not that there is no competition, but there are few companies, and the chip industry is a secular industry. And you take your position based on that, and then the stock is down 50%. How do you feel? So great companies have had good enough drawdowns to scare a lot of investors out of it. Think through that as well. And then you decide whether you want to take a position or not. So that's around Lam Research. Let me get to some of the questions if you had any. Can you review Foxconn FDI field in Wisconsin? I have no idea what the... okay, so Foxconn probably wanted to build a plant and no longer building a plant. Ramesh just said, I invested in May with a drip and stock is up to 75%, trading options too. Yeah, it is time in the market, not timing the market. Majority of the gains that you get are probably from the stocks that you've held, good businesses that you've held over a longer period of time. And but Lam Research is not an exception, but also understand that some of those investors who had those long-term gains also went through some decent amount of a gut-wrenching volatility. Yeah. Talk about those who had, maybe mined Bitcoin earlier. We can all sit and say they were lucky that Bitcoin has now done what, 70% or whatever, 60% CAGR for last 16 years. They got lucky. I don't think they were lucky. I think they had to go through the volatility of seeing their holdings down by 80% more than once. Would you have still stayed with it if your portfolio is down 80%? I don't think that's like that's where you differentiate between the real investors, those are conviction, and the tourists. Right. All right. So that's all about Lam Research, which is not the guy who traded for pizza. Yeah, probably he didn't have his thesis around what Bitcoin could be or whatnot. There is always an amount of luck involved, but you need to be ready to seize that luck.
Thanks, Vivek. Thanks for your timing, everything. So
Now
I
you can
got
decide
it.
on your own. I can't tell you either way because I don't know what else you hold in your portfolio. But
Yeah, sure.
it's not a don't touch this company. There are some companies which I'll tell upfront, I'm not touching with a 10-foot pole. It is not one of those companies.
All right.
All right, let's quickly get into
That's
earnings. Maybe
Thank you.
You're welcome. All right, for those who are new, if you want me to research a company, you need to give me three things. Of course, the ticker, name and ticker of the company. You'll have to tell me who the CEO of the company is and what's the market cap of company. Okay. Maybe next year or maybe after a few sessions, I'll add some fourth element that you need to provide. Okay. And maybe I'll do once in a month, like deep dive like this. All right. So with that, let me sip some water. Then we get into earnings. Then we open it for a breakout sessions. Meantime, any other questions? Okay, so far. Questions to those who are joining here for the first time. Like the format, any suggestions for feedback? Because I've been doing it for 5 years. Sometimes I get, blindsided by other ways in which we could do this meetup. So my ears are always open for a feedback. Won't feel bad if you tell me you didn't like it. It's okay. But give me a constructive feedback. Tell me why you didn't like it and what portions or where you have some suggestions for improvement. If you don't want to tell me in this open forum, you can send me a message on Meetup. But these hours are really for you. So if you're not gaining anything and you're not telling me, it's your problem, not my problem. All right, so let's get into earnings. Like maybe 10 minutes on earnings, and then we get into breakout rooms and talk whatever we want to. All right, so let's get into Alphabet. All right, no, before that, I want to get into the numbers, then we get into the narratives. Jay, look on, so you've seen 3 p.m. Yeah, so today is I think I'm just, me and another guy, we kind of trying to, he wants to start a new in-person meetup, and it says, can you talk about the public side of the markets? I'm like, I love talking about it. And he's mostly on the venture side, and his network is mostly on the private venture side. And I'm mostly focused on public. So like, okay, today, 3 p.m., there's an event in person. It's already on my meetup group, so you probably could have seen it. If you're interested, just show up. All right, so let's talk about Google. Number side, I see all green, right? I don't have to read the numbers, but there's nothing that concerns me. Revenue up 14%, EPS up 22%, both beat on top line as well as bottom line based as against the analyst expectations. free cash flow is down 60%, but that should not be concern to you because they'd invested. So money spent in capex, and also there was a taxes that they paid for Q1 and Q2. They pay in Q2, right? So that's why the cash flow was down 60%. Overall, capex is up 70% for the year. And looking at today's market, the more you spend, the market loves more, right? And they also upped their guidance of the capex to $85 billion from $75 billion. That means basically capex means more capacity added to the data center, maybe building new data centers. And the moment Google said this, we saw Nvidia and other chip stocks went higher because they're going to buy those chips. Broadcom went higher because if Google is putting their own TPUs, the Broadcom will need to put them together. They also increased the debt. They basically took on more debt of $12.5 billion, but who cares, man? They got a $95 billion on their balance sheet. They can pay it off anytime they like to, but probably they got a better deal. And rather than trying to dilute the shareholder, which would have tanked the stock, they'll take this debt. And nobody even noticed this debt, right? There is no discussion on Google borrowed $12.5 billion. It's no brainer. Now, looking at the business side, cloud grew 32%. Right? Isn't it amazing? Google Cloud continues to post 30% growth rates. More interesting, YouTube is almost $9.8 billion business. Right? Search grew 12%. Who was saying that search is bad? Sorry, Sam, right? Search is growing 12%. It's not 20% growth, but it's not dead. Right? So, and operating income from Google, but this is sort of in Google Cloud, is more than $10 billion on annualized basis. And YouTube also, YouTube has surpassed on a trailing 12 months, it's now $50 billion business. This is bigger than Disney. We don't think of Google as a streaming company. It is as big, I guess, maybe as Netflix and FLX. Oh, come on. Netflix, if we look at Netflix, trailing 12 months, $41 billion trailing 12 months. Right? Google trailing 12 months have done more than Netflix. Right? So we don't talk about Google as a streaming company. Capital allocation to spend $22 billion, again, putting in servers and all that stuff. They bought stock of 13.6 and also paid dividend. So pay dividend, buy back the stocks, good cash flow generating company, right? There's nothing not to like in this. Right? I know when ChatGPT came out and Google had its own initial hiccups trying to build their generative AI and everyone thought search is dead. Those have been proven wrong. Search is not dead, right? So let me get into the details of the other businesses. From a search side, Google Lens is the fastest growing type of how the people are searching. It's growing 70% year over year. I don't think I'm contributing. I'm like a old dinosaur still typing. I need to get to the latest ways, right? I did hear some of the analysts little concerned around two separate search surface areas. You can go to the Gemini, which is their AI, and ask questions there, or you can stay on a Google. And there were questions around, maybe will you merge? I think eventually they'll get merged, but probably Google wants to make sure that Gemini is pixel perfect before they take away the traditional way of searching. So right now they're adding the AI answers into a traditional way of searching, but why do we need two stuff?
I think they've merged it right now. It's got AI mode on it. If you go on
Yeah,
Google.
but AI, but you still have the regular one. You need to go and tap on the AI mode tab to see that. So they're taking baby steps. Probably we'll see how the users are responding to it, right? So there were some questions from analysts on the two separate search surface, and I understand Google is, consider this, guys. Search is the biggest cash cow for them. And Google right now in the typical innovator's dilemma of where should we invest? Should you take investments away from the regular search and put everything in AI, which is going to be the star for tomorrow? Or should we continue to milk the current one? But I know that this cow is getting old. It will not be giving me milk anymore, few years down the line. So and many companies can't get over this innovator dilemma, and they get disrupted by some other company. In Google case, would be ChatGPT. Microsoft under Balmer was never able to had a difficult time in getting over the innovator dilemma. Windows was their cash cow, and they never moved towards the cloud as fast as they should have, because that would have cannibalized their Windows business. In this case, you have to cannibalize your search business to move quickly over to the AI. But so I think they are thoughtful and probably is moving towards that direction. Cloud, pretty interesting one. Deals over 25 million doubled year over year. And look at the Gemini usage, 35x growth in Gemini. Right? YouTube, annual run rate is now more than $50 billion, something that I talked about. YouTube, over the last 2 years, has been the largest streaming platform in US. It's not Amazon Prime. It's not Netflix. It's not Disney and Hulu, etc. It's been YouTube. Right? Waymo launched in Atlanta, more than doubled its Austin service, expanded in other cities, and now they're looking at 10 more cities this year. So I don't think anything wrong with the Google. I'm surprised that the share price is didn't respond even more positively to it is, and we understand there's anti-competitive concerns. It's in the court house, and we don't know what the court decision will be, and that's the reason why it is still, I guess, the cheapest Mac 7 company available to us, because of the overhang of regulators, right? But from a current business perspective, let's say if the regulators don't kill the company or doesn't have too much of negative impact, I don't see any issues in the current business. They've been doing just fine. So that's Google. Now let's go down to Tesla. And okay, all right. I posted it today morning. On the other hand, everything I see on Tesla is red. Revenue down, gross profit down, operating income, margin, net income, cash flow, EPS, everything down. Revenue was down, but it was less worse than what the market was expecting. Market thought the situation will be even worse. No, but it was still down almost 12% year over year. And then they missed the EPS mark. They missed the EPS mark despite the fact that they had close to $420 million tailwind from a Bitcoin repricing. Right? So now starting in Q1 2025, all the companies that hold Bitcoin on the balance sheet have to do mark to market. Right? That was one of the tailwinds which I discussed, that when the SEC changed their rule, and Bitcoin is to be marked to market, that will be beneficial, or that will basically be a tailwind to Bitcoin, because now you don't have to take only losses on your balance, on your P&L, which was the earlier accounting method. But despite all the swing of close to what, $400 million, the EPS was still down 20% year over year. But they got a decent balance sheet, $37 billion in cash or equivalents. This is what hurts me the most. vehicle production, almost no growth. Deliveries are down, and the automotive revenue is down as well. So the car business is not that great. And not a ding on Tesla. The car business overall collectively is very bad business to invest in. It grows at 2%, 3%. Overall margins are low single digits. Maybe there are a few companies that do better, but collectively, auto business is a pathetic business to invest in. So for Tesla's story was they had a mid-20s operating margin on their car business, and because out of regulatory credits and all that, now the operating margin in 4%, 6%. It's just like any other run-of-the-mill car business, right? So not a good story, but Tesla stock doesn't run on the numbers. Musk is telling focus on the future revenue streams, autonomous vehicles, robotics. So let's get into that and see what the other business units are doing. So a quick look on the businesses side, and I also this time I'm gonna track. Musk always make a lot of promises. So what do you see as a bold, italicized, and underlined are the promises that he made during the earnings call, right? Semi Cybercap will be slated for production volume 2026. Low cost model, they had to push out the production of low cost model because to produce more and more of the regular models. The reason is the tax credits, that $7,500 EV credit is going to get phased out based on the new BBB. And if customers, those who want to get the tax credits, need to get their cars delivered to them before it phased out. So they are repurposing all the production capacity to produce those cars ASAP. That means the lower cost model get pushed out. Update on autonomous ride hailing. The promise is maybe we'll have autonomous ride hailing to half of the population in US by the end of the year. Then there were questions on when the unsupervised FSD will be available for my own personal use. Maybe by end of this year within certain cities, right? And on Friday, there was a news that Tesla put out a news that we are expanding in Bay Area, and regulators came back saying, no, not so soon. You don't have all the permits. The service was supposed to commence over the weekend. I don't think it's happening anymore. The regulator says, nope, they don't have all the licenses. I think you need some 5 licenses. Tesla has only 2. So not so soon for public usage. So San Francisco maybe come later. Adding non-Tesla owned cars to robotaxi network next year, maybe. Energy was a little better than the automotive side. The Powerwall deployment was record in Q2, but the margins, etc., are impacted by both the tariffs as well as BBP. So if you listen to into the conversation or earnings call, they will say big bill. The CFO will not use the word beautiful for the reasons that you know. So they say it's a big bill. And we are impacted by the big bill, both on the solar energy side of business. But I think over long term, they're really bullish on the battery side because a lot of demand for power coming from these AI chips. You need a way to store the power because a lot of power gets generated. You don't consume all that much. So instead of wasting that, use these batteries to store it. Around XAI, what he has to say was Grok is the smartest. I think Grok 4 was released and Paris claimed that's the smartest one. I have not used this. I don't know. We expect our Dojo 2 operating at scale sometimes next year. Optimus probably will have a design prototype by end of year and scale production next year. 1 million units in 5 years. That's what you need to remember. 1 million Optimus robots every year by 2030. I hope he sticks to this because in 2017 or 2018, he promised robotaxis and we still don't have that. Okay, impact of 1BBB and tariffs. Of course, we talked about IRA credit going out. Bill also made some changes to emission standards. So that means that if you go back and look at the Tesla earnings, they used to get a lot of credit from the regulatory credit by selling green credits to other auto manufacturers. Now those sale will come down. So you should see an impact on P&L on Tesla. Also, they're already start to see impact on their P&L on the because of tariffs, $200 million headwind on automotive, $100 million on energy. And then on China, they can provide super FSD in China because their model is not yet approved by Chinese government. For me, unlike Google, this is a pretty bad report. I don't know what you think about it. I'm not saying anything around the share price, but report is pretty bad. Talking about XA, separate company, sure, no conflict of interest. There was a question asked by analyst, and then CFO says, this is not a forum to discuss it. And basically they culled the question right there itself. So yeah, I'm not, I own some Tesla shares for the ride, but you must understand why you're owning the Tesla shares. It's all based on future, which is what, stock price runs on numbers and narratives. Tesla runs only on narratives. The numbers don't support where the stock is, but the narrative, Elon is a master storyteller. He can just amp up the impact of narrative by 10x, right? And that's where the stock trades, man. So stock took a beating after earnings and then recovered. It's a narrative stock. So, but be aware what you have in your portfolio. All right, with that, let's I'll skip the other stuff. Let's get into the breakout rooms. Any questions before we end our regular session? Nope. Tesla shareholders, how you feel? Tesla is a very divisive stock, right? Either you love it or you hate it. There are very few who are like neutral. They're very passionate shareholders. Amazed it's not dropped to 180 yet. If it is on 180, probably I'll buy. I think I have a strangle on Tesla. It's a good stock to trade options on because it's highly liquid. It's a decent premium. I think I have a 250 and 400 strangle for September. And I think if it drops below 250, probably I'll buy it. For automotive business, I'll give $150, $160 for that. And another $100 for all these bells and whistles, right? So 250, 275, fine. Beyond that, I don't think. The in-person session, Johnson, are you having this one? Will that be a repeat or this one off? We'll have to see because this is not my own session. We'll have to see what the traction is. If we find that there's a traction, people are interested in this, maybe then we'll repeat it. We also need to find that we have a location available. So I can't say that we're going to repeat or, maybe we'll repeat after a few
I'm a
weeks.
holder of Tesla stock. I will keep it for the long run.
Yeah, one thing you can do, don't bet against Elon. Don't short Tesla stock. Right. Yeah, I own Tesla stock as well. So, but my position size is assuming, Elon is Elon. So this, the details are here. You have to register, just provide your email address, and it's in Menlo Park for those who are in Bay Area, 3 to 6.
It's not a Zoom meeting?
No, this is not. This is in person. This is in person.
So you'll give us an update on that next week?
Yeah,
Well,
I don't think we'll have these deep discussions because we're still trying to figure out. So I'm working with another person, Sweat. So he basically is organizing this. I over the last few months, I kind of became a de facto judge for a startup pitch event. So yesterday night I was there. We've seen some good quality of startups coming and pitching it. I had a fun in talking with the founders, and sometimes some founders will bring in some crazy ideas. So good to have those discussions with them. And so he runs that Hacker Dojo weekly, monthly pitches. That's how I met him there. I went as an attendee. They were short of a judge. They asked me to judge it and then say, we want you every month. So I'll go my community service. So he organized, this is the first one separately. We'll see. So he's more on the pre-public market. I am more of a public market guy. We'll try to cover 360 degrees.